Good afternoon, everyone. Today's webinar is going to start in 3 minutes at 16 p.m. China time. Thanks for your patience. Good afternoon, ladies and gentlemen. Welcome and thank you all for taking the time to join us in this lovely afternoon. My name is Chen, representing International Department of Nanhua Futures. In the next hour or so, I will be your host and accompany you to have an in-depth journey regarding QFII with several of our speakers. As you already know, the regulators and onshore exchange has jointly announced that starting September the 2nd, QFII participants are officially, legally, and eventually approved to engage in the trading of onshore futures and options, which is certainly an excitement for people like us who've been waiting for quite a long time. So right after the announcement, there were quite a few inquiries came to us saying how confident you are this time that this is a real deal rather than another false alert. So frankly, we were not confident at that time because for a lot of historical reasons. And as time goes by, along with some process flows between custodian banks and the exchange, we believe we've got enough evidence to proving that this is happening now. And I'm sure this is going to be covered by our speakers later on. So speaking of which, we're honored to have Yiping Yang representing QFII, Iris Gao at DBS China, Melody Liu at DBS Security, and my colleague Mara Wong at Nanhua Futures, as well as our old friend Anthony at CQG to join us as key speakers today. So a quick brief of today's schedule. There will be 4 consecutive sessions presented by our speakers and no QA sessions until the end of the webinar. Hence, if you have any questions, please leave it to the end, but you're more than welcome to bring it up in the chat room anytime you want, and we will try to have all the questions answered if time allows. Okie dokie, now let's welcome our first speaker of the day, Yiping Yang, the Associate Director of the International Cooperation Department of QFII and INE, who is responsible for international cooperation, overseas marketing, as well as investor education of the exchange. Hi, Yiping. I'm going to pass you the host, and you may start your session anytime you want.
Okay, thank you very much for the introduction. Thanks Nanhua Futures for having me here. My name is Yiping. I'm from the International Cooperation Department of QFII. Today, I would like to share with you the opening up process of QFII and the new development in QFII schemes. So talking about the opening up process, we could quickly look at the opening up timeline. Internationalization of QFII started in 2013 when Shanghai International Energy Exchange, in short, we also call INE, was established as SHFE's international platform to list its international products. In the next few years, relevant policies on FX, taxation, customs, etc., were released, and INE completed its overseas registration in Hong Kong and Singapore. In March 2018, Shanghai Crude Oil Futures was listed on INE. This was China's first commodity futures product open to overseas investors. So until today, 5 international products, also called the specified products, have been listed on INE, accounting for more than half of the total number of international products in the country. This is an opening up model based on its products. Almost all overseas investors, no matter whether he is an individual or institution, financial company or commercial company, can trade international products. As mentioned before, on September 2nd this year, QFII, INE, and with some other exchanges jointly issued notice that clearly allows QFII to invest in commodity futures and options. So different from the international products mentioned earlier, this opening up model is more based on investor type, which is QFII. So similar to international products, it also indicates that the opening up of China's futures market is accelerating. Since 2018, both the number of overseas investors and the trading volume of INE products have seen significant increase. Overseas investors from more than 20 countries and regions across 6 continents have participated in INE market. The number of overseas accounts have been increasing year on year. At the same time, we have 3 overseas special brokerage participants, 76 overseas intermediaries have been registered with INE, covering 10 countries and regions. These brokers together introduce global investors to our exchanges. In the first half of this year, under the combined impact of pandemic and geopolitical issues, the trading volume of most domestic commodity exchanges declined, but INE went the other way. We can see from the chart, the average daily volume of all INE products showed a year-on-year increase, which is a highlight both for the exchange and also for the futures market as a whole. In recent years, we have explored diversified form of internationalization. For example, we have different opening up models like specified products and QFIs. We also have cooperating with overseas exchanges, enriching market management tools like TARs and options, and various reference prices like market price, monthly average settlement price, etc. In addition, we are expanding our delivery service overseas. So low sulfur fuel oil allows cross-border tick delivery business. Rubber and copper have multiple overseas registered delivery brands. So thanks to these efforts, we've won a lot of international awards, such as the Derivatives Exchange of the Year, Best New Derivative Contracts, etc. We've also won some prize this year. Back to the QFI scheme. This was introduced first in 2002. So in the next 2 decades, the QFI scheme has undergone several rounds of modifications, including the access threshold was lowered, the investment shareholding ratio was relaxed, the asset allocation ratio was removed, and the total investment quota was removed. In 2020, CSRC, PBOC, and SAFE jointly published the new QFI rules, consolidating the 2 measures of QFI and RQFI, and expanded the investment scope to include commodity futures, options, and stock index options. So after 2 years, we now see the products available to QFI announced on September the 2nd. So looking back, the QFI reform process was also a policy relaxation process. The opening up is gradual, step by step, but the direction did not change and will not change. So for this slide, lays out the major policies and rules on QFIs, including those at the regulatory level and the exchange level. But please note these are not exhaustive. At the regulatory level, it mainly involves the rules released by PBOC, SAFE, and CSRC, which was touched upon earlier. The rules on CFMMC are mainly about requirements and operational guidelines on account opening. And at the exchange level, though we have revised the trading rules and the rules on designated depository banks in November 2021 to accommodate QFI participation, most of these rules applied to QFIs are the same as those applied to special corporate clients. So in other words, the rule system applies to QFI is mature, nothing new, and efficient for years. According to the notice released on September the 2nd, QFIs will be allowed to invest in additional 41 futures and option contracts, including 23 futures contracts and 18 option contracts. Most of these contracts are closely linked to the overseas market and have good liquidity. For QFI and INE, 16 contracts are open to QFIs, including 11 on QFI and 5 on INE. So those covers precious metals, non-ferrous metals, ferrous metals, and energy products. Compared with other exchanges, we have the largest number of products open to QFIs. Besides that, only 9 specified domestic products are open to investors. So this is indeed a huge step in the opening up of the market. We've also done some analysis based on the list of QFIs released by CSRC. So now let's look at the profile of QFIs. As of July 2022, there are 705 QFIs. Most of them are from Hong Kong, US, and Singapore, accounting for 37, 12, and 10% of the total number, respectively. Since the release of the new QFI rule in September 2020, the number of QFIs have increased by about 40%, from around 500 to 700. This gives a flavor of the enthusiasm from overseas investors to invest in commodity futures and options. In terms of the nature of the institutions, most of them are banks, fund asset management companies, security firms, and trusts, with fund and asset management companies being the most. Currently, overseas investors can access Chinese futures market mainly through the following channels. First is to set up a wholly foreign-owned enterprise in Chinese mainland, which we also call WFOEs, and participate as a domestic client. Second is to trade specified domestic products as an overseas client through a domestic futures fund member, OSBP, or an overseas intermediary. Third is to participate through the QFII scheme, which is the main topic today. And the fourth is to participate through OTC cross-border financial derivatives via securities companies. Well, this table briefly compares the QFII channel with the specified product channel, which is also the international product channel. So participants under the QFII channel are overseas entities with QFII qualifications, while overseas participants under the specified product channel are broader in scope, including overseas individuals, overseas institutions, including financial institutions, including commercial clients. So apparently, QFII needs to obtain qualification approval from CSRC in advance, but specified product channel does not have such requirements. Here, we've got a gentle reminder that for those who have already got QFII before September and want to start trading commodity futures, they need to first go to CSRC to modify their investment plan and add commodity futures and options to the investment scope before applying for trading code. In terms of account opening institutions, QFII clients need to open accounts through domestic futures firms like Nanhua Futures, while under the specified product channel, overseas clients can open accounts either through Nanhua Futures or their or INE's overseas special brokerage participants, or our overseas intermediaries, including Nanhua Singapore, Nanhua UK, etc. In terms of margin currency, QFIs can only use RMB as the margin currency, while participants under the specified product channel can use US dollar as margin in addition to RMB. In terms of investment products, the scope of QFII channel is broader. Finally, in terms of physical delivery, currently QFIs are not allowed to participate in physical delivery. So for more details, please refer to regulation on the administration of physical delivery business for special corporate clients of SHFE and of INE. Whereas under the specified product channel, some clients can participate in physical delivery. At present, a lot of general corporates, especially large commercial players, are already actively trading in physical delivery. Finally, we've listed the basic information of SHFE products accessible to QFIs, including the listing exchanges, contract size, trading hours, as well as the liquidity information. So we see that the night trading hours vary from product to product. They all start at 9 p.m. Precious metals end at 2:30 a.m. Non-ferrous metals end at 1 a.m. and ferrous metals end at 11 p.m. So for more details, please visit the official website of Shanghai Futures Exchange to learn more about these contracts. Going forward, we also plan to make more English investor education materials available on SHFE products. According to our survey, crude oil and copper are the most popular products among overseas investors. So today, please allow me to say a few words briefly on our energy and copper products as well. First is the energy products, including crude oil futures and options, as well as low sulfur fuel oil futures are available for QFIs. We know more than a dozen of international exchanges have launched crude oil futures. Among the most famous are Brent and WTI. So how are we different? First is the good liquidity and steady growth in market size. In 2021, both the trading volume and open interest of SC futures are pretty high. Its market size is second only to WTI and Brent. Institutional investors account for over 50% of average daily trading volume and approximately 70% of the open interest respectively in 2021. These numbers are among the highest among domestic futures products. Overseas clients' contribution to trading volume and open interest keeps increasing year on year. Secondly, SC is a better indicator of China price. On one hand, SC demonstrates very high correlation with Brent and WTI. On the other hand, it has also shown some independence in price fluctuation. For example, in 2020, as the COVID was brought into control earlier in China, SC prices also demonstrated less decline and earlier rebound than overseas futures products. So SC gives an accurate picture of the supply and demand changes in China, which is the largest crude oil consumer and importer in the world. Thirdly, SC provides great price discovery platform during Asian hours. And even for Brent and WTI, if we compare the trading volume contributed by Asian hours out of the whole day, the contribution ratio have increased by 64% and 82% respectively, compared with the time that SC was listed. And finally, we have formed a multi-layered derivatives market and instruments, providing a one-stop solution to global investors. So besides crude oil futures, we have crude oil options, and we also have small tools like tasks, pricing tools like monthly average settlement price provided to the market. And we also have downstream products such as fuel oil and bitumen. So we provide a comprehensive and multi-dimensional risk management tool. So besides energy products, copper is also a product of common interest among overseas investors. SHFE's copper futures and options and INE's bonded copper futures are now open to QFIs. There are three main copper future markets internationally, namely LME, CME, and SHFE. Asia is the world's largest producing and consuming region for refined copper, with China being the main growth driver, accounting for 41% of global production and 51% of global consumption. Since SHFE listed its copper since 1993, it has been running smoothly for nearly 3 decades, serving as a pricing benchmark for domestic copper physical trades. According to FIA in 2021, SHFE copper futures and INE copper futures ranked first and fifth among similar copper contracts globally by trading volume. Regarding internationalization of copper futures, we have adopted a dual contract model. SHFE's CU contract is based on tax-included market, which means CU price includes tariff and VAT, reflecting the demand-supply relationship of domestic market. And INE's BC is based on the bonded market outside of the customs border, so its price excludes tariff and VAT, reflecting the international market supply and demand. So the dual contract model can better serve the price risk management needs of both domestic and international industries. The chart on the left compares the BC and CU contract. We see quite a lot of investors also doing arbitrage between CU and BC, and also between BC and overseas copper futures like LME copper. Okay, so finally, if you have any questions, please contact us, and here is our contact information. Also, in the bottom right corner of the page, there is a QR code for INE's mailing list. Subscribers can receive INE's monthly reports and reminder of investor education events. Thank you very much. That's all for today, and I will pass the mic back to the host.
Thank you very much, Yiping. As an onshore broker here in China, we did see a lot of effort being made by QFII and INE, and we definitely look forward to having a lot more QFII and internationalized product in the future. Thank you once again. Now let's move on to the next session. In this session, our two speakers from DBS Group will jointly introduce DBS one-stop solution for custody and securities trading with access to China's capital market. They are Iris Gao and Melody Lu, representing DBS China and DBS Securities respectively. And let me pass you the host, Iris. There you
Thanks,
go.
Chen. Thanks, Chen. Let me present my slides. Wait a minute.
Sure.
Good afternoon, everyone. I am Iris Gao from DBS China Securities and Fiduciary Services, and our team is responsible for making sure foreign investors like yourself can access the capital markets in China through programs such as QFII. DBS is highly committed to China as a core market. We are one of the first foreign banks to incorporate in China since May 2007, with more than 15 years of operational track record. We are the only foreign bank approved and licensed as Futures Depository Margin Bank by RNE, the Shanghai International Energy Exchange. By the way, we're applying to be the QFI Margin Depository Bank of QFI and INE in the meantime. We also established a majority-owned securities joint future with registered capital of renminbi 1.5 billion in China, further deepening our commitment to China capital market. As a rising custodian in China, we are heavily involved in local custody industry, and our professional English-speaking staff are well-versed in domestic and international banking standards to offer you the best and most comprehensive one-stop solutions. DBS China is first among all foreign banks in terms of award quality and quantity, and one of the leading institutions among all market players. On this slide, we list some awards won by DBS China in recent years for your reference. With the unwavering commitment to China, we always drive the innovation in the industry. DBS China Securities Services is the advocate of dialogues with regulators on improving meaningful market access for our clients. We have proactive dialogue with local regulators, including CSRC, CBIRC, PBOC, and SAFE, cuts across all levels in the bank. Next, I will give you an overview how you can access China capital market through DBS. I'll cover the types of access and the process. Firstly, let's look at the history of China capital market access. QFII, the Qualified Foreign Institutional Investor Program, was launched in 2002 to allow foreign investors an entry in the China onshore market. Subsequently, more channels such as CIBM, RQFII, Shanghai Hong Kong Stock Connect, Shenzhen's Hong Kong Stock Connect, Bond Connect, internationalized futures contract were introduced as the countries opens and allows more participation from foreign investors. The latest major development is in September 2020, where QFII and RQFII program are unified through the new QFII RQFII regulation. Entry thresholds are lowered, investment scope is expanded, and quotas are removed, effective from the 1st of November 2020. Most recently, on the 2nd of September 2022, as approved by CSRC, all local futures exchange, including QFI, INE, BCE, ZCE, and CFAX, has announced a total of additional 41 futures and options contracts to be opened to QFII. So I can say the unified QFII program is the most comprehensive and best access channel for you to access almost all products in mainland China. Let's dive straight into QFII's latest developments and how DBS can be your partner in this journey. The fundamental question is which channel or access should you as a foreign investor choose? So on this page, we've listed 3 advantages for your reference. Next, I will go through the latest development in 2020 because that the unified QFII is the most important progress in recent development. You can see, aside from the QFII and RQFII is unified, the applicant qualification requirements are relaxed. The application process and the documentation is simplified. Most importantly, investment scope has been expanded. At that time, in the QFII regulation, commodity futures are added. So we have been waiting for like 2 years. So we are so excited to see the announcement on the 2nd September so that QFII investors could finally invest into China local commodity futures and options. On this slide, I have listed an overview of how you can access the different categories like equities, funds, fixed income, and futures. Next page, I have listed the comparison between the old QFII and the RQFII and the unified QFII. So you can see I can remark the content in red. So you can see the qualifying criteria has been removed. That is very important because in previous QFII scheme, the asset manager and insurers have at least $500 million. So that quantitative threshold has been removed from the regulator. And from domicile wise, you can see RQFII used to accept only 19 markets, but currently no restrictions on markets or domicile. With the newly approved 41 futures and options contracts, QFIs now could trade quite a lot of commodity futures and options contracts on the various commodity exchange on top of previous index futures. So we as QFII custodian could help you to deliver your QFII application to CSRC. So on this slide, I have listed the comparison, the previous required documentation and the latest new required documents. You can see now only a total of 7 documentation is needed. On the CSRC approval time frame wise, previously QFII needs 20 working days. RQFII needs even more, 60 days. But now CSRC only need 10 working days to review and approve the QFII. This is also the first step. After you select DBS as your QFII custodian, we will help you do the QFII application in the beginning. The step 2, so next is a whole picture of implementation process. Step 2 is QFII application. So CSRC will take 10 work days. Step 3 is step 3 is to do the QFII registration with SAFE, the state of foreign exchange. On the right, I have listed 4 scenarios. So foreign investors could see which implementation they will apply. For example, scenario 4 is for those QFII like to invest in futures, including index futures and commodity futures and contracts. While appointing local futures brokers, we, DBS China as your QFII custodian, will help you open account. So at the beginning, each QFII needs to needs to open a renminbi basic account. It is a mandatory requirement. For this account, it should be approved by PBOC. After this account is opened, QFII could open different special accounts for different purposes. For futures trading, if the QFII will invest in SHFI and INE, which DBS China will be the FMDB, the Futures Margin Depository Bank, they don't need to open additional account at other local Chinese bank. We could directly support you to do that. And the futures brokers, after our cash account is opened, the futures brokers will help you to open trading ID with SHFI and INE. After this trading ID is opened, you just need to sign an agreement with us and we can help you to link up your NIA cash accounts with your margin account with local broker. For example, for your margin account with Nanhua. Besides, if you need to invest in other commodity futures like listed in DCE and ZCE, we will help refer you to another local Chinese bank to open one additional cash account so that the open trading ID for DCE and ZCE could be applied successfully. If you'd like to use your own Chinese bank, we DBS could all support. Next page is an overview of the closed loop circuit for margin transfer for futures trading so that you can see how the funds is transferred. The first step is that the QFII needs to transfer money from offshore. So the money will arrive DBS China QFII account first. After the fund is credited into client's cash account, if the client has do the link up before the between the bank account and the margin account, actually the margin could be further transferred to local futures brokers. Then the future brokers will help to fund the margin to the respective exchange so that the client could start to trading or to top up losses from their daily settlement. On the reverse, if the client decide to repatriate the funds, they could the local futures brokers to help the client to withdraw the funds from futures exchange. And then the futures brokers will allow the QFII customer to withdraw the margin from their broker account. After the funds has been credited to client's QFII cash account with QFII custodian bank, the QFII could finally remit the money to their offshore account. Here, one thing to note is that offshore account should be under the same name of the QFII. That is one of the regulatory requirements. Next page is a brief overview of the QFII account structure, because to avoid QFII to do some arbitrage between onshore renminbi and offshore renminbi, actually there is strict requirement from regulator. If the injection is in CNY, the QFII must open a set of account that only allow that is corresponding to the CNY injection. If this QFII also inject foreign currency, then this QFII needs to open an additional set of accounts corresponding to the FCY injection. So two sets of accounts are strictly segregated and no fund transfer is allowed at any scenario. So we normally suggest the QFII to open one set of account only for their operational efficiency. But if the QFII decides they need both injection. They need to do both CNY injection or FCY injection. We could support them to open 2 sets of accounts. On the last page, we've listed the key contacts from our custody team. So we will be more than happy to hear from you if you are interested to apply for QFII, or if you are existing QFII, you'd like to add commodity futures and options to your QFII investment plan, please reach us and we will help you to do the filing and the onward implementation. Thank you for your attention and time. Now I will pass the host to Chen.
Thank you, Iris. And I'm going to just directly pass that to Melody. And for information, I will be sharing the slides for Melody. And give me just a second. There we go.
Okay, I'm very glad to receive the invitation from Nanhua Futures. And the first page will introduce our shareholder structure chart. The major shareholder of DBS Securities is DBS Bank of Singapore. And the Chinese shareholder is SOE. DBS Securities has 4 business licenses, including IBD, prop trading, brokerage, and research. Because of the background of a DBS shareholder, we know Singapore's culture and working style very well. I hope we are the Chinese securities company that knows Singapore's client best. Now, next page, please. Now, brokerage business mainly provide 3 services, including trading desk, sales, and corporate access. Dealing provides service to institutional clients, connecting Shanghai Stock Exchange and Shenzhen Stock Exchange. Trading systems include order management system, fixed gateway, and algo module is still under construction. Equity sales also serve QFII and China Mutual Fund. Corporate access provide investment meeting, include expert meeting and corporate meetings. Next, please. Our department is committed to creating one-stop service, taking QFII client as a core, sales as a leading, mobilizing trading desk and operations, and providing client with completed service. We could provide QFII client with timely market information, customized corporate access, and recommend our research report, as well as block trading project. Next, please. And we can receive client order by email, Bloomberg, or other method specific by client. And we are occupied with trading OMS widely used by top-tier brokers in China. The OMS itself is embedded with the latest algos, including TWAP, VWAP, POV to suit client need. And when executing order, when experienced dealers, we can help target client web, benchmark price, or help work a certain amount of market volume, or depends on client's specific requirements. We can also offer price volume analysis of specific stock, open client requirements, and we will send trade confirmation that contains all details of trading end of the day. Next, please. On the September 2nd, domestic futures exchanges, including the Shanghai Futures Exchange, announced and expanded to 14 plus futures products are now available to QFII investors for both future and options trading, mostly on metals, precious metals, petrochemics, and agricultural products. All 5 exchanges has provided guidance on trading. While stock market also bring commodity investors are different yet more varying investment scope, represented by leading listed company with commodity producing background. Selective they are, such like precious metal, Zhongjing Gold, Shandong Gold, and non-ferrous metal, Zijing Ming, Jiangxi Copper, and petrochemics crude, such like PetroChina, Sinopec. And meanwhile, next please. Commodity ETF trading on stock exchange have the benefit of low trading cost, low leverage, T+0 trading mechanism are directly linked to corresponding commodity future products. There's a list of commodity future available to QFII investors. The list is still growing. Now, the varieties include soybeans, soybean meal, energy and chemics, and gold. If you need open a security account in China, you can feel free to contact us. Okay, let's back to the host.
Thank you very much, Melody, and thank you again, Aris. So DBS has been quite active in the onshore market, and now as DBS Securities engage, I do see there are multiple areas we can, explore together. And now please take a break and let's welcome our next speaker, Mara Wang, and the Senior Manager of International Department of Nanhua Futures. Mara has over 10 years working experience in the industry, especially in international finance and fintech. She's recognized an expert in providing comprehensive cross-border solutions, specializing in Chinese internationalized futures, QFI, WFI, overseas intermediary, as well as asset management. And I think Mara is going to cover paths to invest in China derivatives market under the new QFI policy. And Mara, if you're ready, I'm going to pass you the host.
Thank you so much, Chen. Let me share my slides at first. Can you see my slides? Okay, good. Hello, everyone. My name is Mara Wang from International Department of Nanhua Futures Company. Thank you so much for making the effort to join us today. I would like to introduce how to invest in China derivatives market under the new QFII policy. So in the next 15 minutes, I would like to introduce it from 5 different topics. The first one is the overview of the China in derivatives market. The second one is the insight of the QFII policy. Then how can you trade in China? Then if you don't want to trade, how can you invest the good product as you want? The last part is about our company. So for the first part, the landscape of the China derivatives market. Chinese futures and options markets are growing rapidly and have showed significant liquidity and diversity. From the first bar chart about the global position of China's futures derivatives trading, we can easily find out we already cover almost half of the Asia market, and we have 17.66% in the global market share. The next one, the table is talking about the global trading volume ranking of futures and options. In the respective world top 20 rankings, the Chinese products are having like 16 places in agriculture, 14 places in metal, and 5 places in energy, 3 in precious metal. And from the last bar chart, we can easily find out how great development is of our trading volumes of futures in China. And we believe within the internationalization of Chinese financial market, there is an enormous potential of the Chinese market was still going on, grow. So now you already know how many opportunities in the Chinese market. Then we can easily to find what's the combination with the QFII policy. How can you enter through QFII? First of all, the definition of QFII, as our speakers already mentioned, QFII refers to foreign institution investors who having the fund from overseas to invest the Chinese market here. So for the QFII investment scope, said simply, you can invest for bonds, stocks, and also now you can invest in Chinese commodities, futures and options, and also you can invest in the financial futures and options for hedging. So from this words in blue color, what you can do from us, we can support you not only to trade them immediately, also we can help you to find the good funds with a relative investment scope. And also we can have a customized fund for you to invest. I will talk in details about them in after. So if before I talk more details about the QFII, let's just have a big picture of the 3 main channels to accessing the Chinese derivatives market. Here I present the QFII, international contracts, and the WFI. Of course, we also have swap because it's in the OTC market, so I didn't put it in this page yet. Let's just combine these 3. Except for the QFII international contracts, now we have 7 futures and 2 options in the market. You can open the account immediately out of China, found a good overseas intermediary and open the account there. You can trade them immediately. But because of the limited number of the products, maybe you're not satisfied of the scope. Then you also can consider to set up a WFI company inside of the China as a Chinese company. Then you can benefit from them. You can trade all range of the products in the market. At this moment, you need to consider is how can you deal with a Chinese company here, because you need to face a Chinese regulator, you need to fix the tax or etc. So at this moment, if you are not ready to enter Chinese market as a Chinese company, QFII might be the best option for you, because at this moment you have 45 products you can trade with through the QFII channel, and you also can easily just withdraw your money out of China as you want. So here I put this 45 products here in details. If you want to know each of them, like please don't hesitate to contact us. I put all the products in Chinese market, and the blue color here is the QFII products you can trade. And with the dark blue color here is international contracts. Now you know what kind of products you can trade. Then let's see about the access. The main point here is you can find the good partner to help you. Then you only need a simple 4 steps to enter Chinese market. The first one is to find the good custodian banks, for example, DBS, and the domestic brokers, for example, futures company like us, and the security companies like DBSS. Then you can go for the second step. For this step, mainly the work will be handled by the custodian banks. You just need to support to offer the documents. They will help you to apply for all the steps here. The third step is opening the account to trade. First of all, you need to have a basic cash account. At this moment, if you just want to invest for the good products, for example, like public funds or private funds, you just need a basic cash account. You can invest immediately. Then if you want to trade by yourself, then you need special accounts. Then also you need to open the futures trading account with us, and we will help you to do the IT docking. The last part is exiting the market. We will help you to asset for all the steps here. Then we talk about the fees and the cost. And for this part, really, you don't need to worry about that, because compared with the European price, the Chinese trading cost is really nothing. For example, the custodian fees, you only need 3 to 5 BPs per year. And we will charge like monthly to the custodian banks. But if you just want to open a QFII without any trading, you even don't need to pay any fees here. The same as our trading commissions here. If you want to enter this market, but before your trade, we will not charge for anything. So don't hesitate to ask us any questions. We will support you to understand the market more. And when you get ready, we will be your best support here. Then the next part is audit fee, and for the tax, we will also help you to find the right partners to talk about it. And the market price is always clear. You can easily find it here, or just talk to us. We will find you the lawyer and the accounting firms to talk. Okay, so now you know how to apply for our QFII lessons, and are you ready to use the QFII lessons to trade? What you need to care about for the next step, which is risk management. If you trade by yourself, the risk management is always the most important things. In our Chinese exchange, you have so many different rules. For example, like margin rules always go first one, and the hedging rules, position limits, trading limits, and abnormal trading rules, etc. So no worries for all of them, because we will set up the real-time risk rate reminder to send you the notification, and we will tell you all the important notice as what you need to know at the first moment when I get it. So from this part, we can send you the email. Also, we can contact you by phone or any channels as you want. For example, Bloomberg also can do. So we will offer the premium services during your training time. For example, as I just mentioned, for the comprehensive trading notice and the exchange rules, we also can help you to customize your settlement report in English and Chinese. And we will set up the real-time warning for the futures account managing risk. Not only for that, we also have massive onshore and offshore research reports can provide to you, because our Nanhua Futures research institutions is the first one set up in Chinese market. We have the longest time. And we also have the Nanhua Cloud service as a data support. We can offer you the stock market, bonds, public funds, and also very important, if you want to test your strategy can work in China or not, we can help you to get the historical exchange market data to send to you before you opening any account to test your strategy at first. Normally we can get 2 years or 3 years. If you want maximum, we can get 5 years historical exchange market data for you to test your strategy. So after the risk management and IT and also data, I think the next important thing you might be care about is IT solution. So here I put the trading networking resources here. We have the direct connection with all the exchange markets. For our general clients, we offer Bloomberg, CQG, TT, ESIMI, and the CTP, and we are the top futures company in China to offer the majority of the IT platform. As I know, like not so many companies can compete with us for this. We are totally top, like top 3, top 4, I don't know, for offering the IT platforms here. And also, if you are co-location like client, we can help you to get the server room matching with each exchange if you want, based on the different products here. Then the next part is, if you don't want to trade by yourself, you as a management company, you are looking for some good fund you want to invest immediately. What we can offer is our asset management service. We call it a fund matching pool. We set up the pool connection for matching the clients and the tier 1 investment advisors in China immediately. And all the good advisors in our pool, we will use our HOP fund to test their stability and the capacity of the trading strategy at first. Then we will introduce them to our clients. What we can do is not only inside of China, we have so many sub-companies overseas. So we will also customize the fund vehicle for clients as like cross-border asset management, for example, like QFII, WFI, and QD, etc., for set up different funds inside of China or outside of China. And if you are trading firms, you want to work with us, we can help you to access all the Nanhua asset management and FOF and overseas like funds, etc. Here I also put the process, how can we work with clients and the advisors. We have so many different strategies in Chinese market, but here I would like to introduce CTA at first. CTA means commodities trading advisors, and we divided it to the different categories. For example, based on the strategy and the data resources and target, and also trading frequencies. As you want, we can help you to fund the existing fund you want to invest immediately. Here, I present 2 Nanhua CTA products already in our pool. I put the performance here in the past years to show how good like performance they are having here now. The last one I would like to introduce is our Nanhua Commodity Index here. Our Nanhua Commodities Index is was set up since 2004. So it's already nearly 20 years here. And we are the only one as a benchmark for the foreign investors want to invest in Chinese commodities like industry index inside of China. We're the only one, as we know, it's like a very important benchmark. So far for all the data we share with our existing client who trade with us, or we sell it as added value service here. But the good news is we gonna publish it in Bloomberg soon, because we are considered to launch it as a trading index one day, nearly in the future, for our overseas clients. For example, you are already come inside as a QFII, you don't want to do the research of all the Chinese like commodities product. So you just want to fund index you can trade, combine with your other multi-strategy like trading solutions. For example, you also trade like bonds or stocks at the same time. You just want to combine something with the commodities market, then you can buy or sell our Nanhua Commodities Index in the future. Once it's launched, I will let everyone know it. But at this moment, it's our plan at this moment. But you can get the details to know more about our commodities index here. Okay, so next part is about our company. Our company is the first A-shared listed futures company in China, and we have the largest number of sub-companies overseas. So that's why we're specialists of our cross-border services, because we are using the experience to serve our sub-company, to share that like experience with our clients now. And as I mentioned before, Nanhua Futures set up the first futures research institute in China. So we have the massive onshore and the offshore research reported. In the conclusion, what is our advantage? The experience in serving offshore institutions. We are the earliest cross-border investment service team to serving the QFI participating in the financial futures for hedging. And our team members, majority of us having the overseas study background and a long time in futures market here. And we can share you for the settlement issues and all the good services here. The last one is a very important one because we're the Asia listed company, so we can guarantee your safety of the funds. It's always the main concern from the overseas clients. And we can offer you the one-stop financial solutions, for example, like Chinese international futures and QFIs and swaps, and also the asset management services, as I mentioned. So the last one is a full set of the trading systems and IT support. As I mentioned, we have the largest IT platforms here, TT, CQG, ATP, eSunny, and Bloomberg. Please contact us if you are trading with them. Okay, so this is what I wanted to share today. If you are interested in trading immediately in China, or you want to find the good products to invest, we can help you to get what you want. Like for example, the fund, we also can help you to customize the one as you want. So please don't hesitate to contact us and let me know what you need, and we are always happy to support. And please talk to us before you want to open the account. The consulting is always for free from us. So this is what I want to share today. Thank you so much.
Thank you, Mara. That speech was really helpful for people who want to access China via either QFII or internationalized futures. And please remain on the line in case there were already questions asked in the QA. So our speaker has introduced what opportunities are as well as how they can be achieved. And I'm sure you'll be interested in, what kind of execution options are available. Hence, today we're also honored to have Anthony, Head of Product Specialist of CQG APAC, who is also an old friend of us. So Anthony is going to add some colors for us by introducing CQG's trading solutions for QFII cross-market arbitrage strategies. Hi, Anthony. It's been a while since our previous event, and thanks very much for coming. And let me give you the host, and you may start your session anytime now.
Thanks, Chen. Let me just start the screen sharing. All right. First of all, thank you for the invitation. My name is Anthony Cohen. I'm in Singapore with CQG, and I'll be spending the next few minutes talking about arbitrage opportunities for QFII participants. Briefly about the content of the next few slides, we're going to be talking about energy, part of the FX hedge that's quite important with all this process. Then we have non-ferrous metals, commodities, precious metals, and non-agricultural products. The first product and strategy that we're going to be looking at is really the crude oil. It's as we heard earlier, one of the very popular one. It's involving the ICE Brent and the sour crude on INE. As we can see here, there's obviously quite a large positive correlation there. And since the market is actually closed, we're going to be showing a a recorded version of it, but just to show you that this spread is quite straightforward. The contracts are of the same size, and the only sort of requirement is the FX hedging. So it's really a one-to-one between the two products, and we're seeing here that the two products are about $85,000 in terms of contract value, and this kind of requires FX hedging to be of a similar contract size. And from the very beginning, the exchanges such as SGX and HKFI or HKEX were offering contracts of about $100,000 of value. But since the launch of these INE contracts, new products and mini contracts have been made available by those exchanges, HKEX and SGX, as well as the ICE and others like Apex. But I've decided to give you an overview of the most liquid ones. And the reason why this is important is because if we look at the earlier spread, $85,000 in terms of contract value can be a little bit under the contract size of a futures contract for USD CNH. So using a 1-to-1-to-1, so meaning one contract on the SGX full size of $100,000, means that we can actually be a little bit overhedged on the currency side. So you can either use one big contract and be a little bit overhedged, or 4 mini contracts on HKFI and be a little bit underhedged. As we can see here, this is an overview of, this is an aggregated view of those contracts. And we can see that this is going to be quite important for the next slides. We can see that the columns closest to the actual price would be the big contracts. So this is the big SGX FX and the big HKFI bids, and these are the offers. We can see the spread is quite tight for these products, and the ones on the outer sides, outer columns, would be the mini contracts, and we can see that the spread is not as tight. So there's going to be a benefit from using the larger contracts to hedge in terms of pricing, but there's also a benefit from using the smaller size contract in terms of contract value. So the next strategy would be the copper one. Copper can be found in various exchanges outside of China to be used for arbitrage purposes. We have the copper on the LME, which is represented there in white, and the red one would be the INE bonded copper. We can see the contract values over there. So really this would be a 1-to-5 relationship ratio. So 5 INE for 1 lot of LME. We can see that there's obviously a very high correlation on both the daily and the intraday basis. So what does that do? We can do it a little bit differently on this side. So what we can do here is we can turn the LME contract into CNH, and this would be a ratio of 1 LME to 2 CNH on the SGX, which will bring it to around $200,000, and then spread that against the bonded copper on the INE, and we can see here the contracts working. So what we see here, and this is something I want to show, is that there is an importance in terms of contract size, and we can see that the liquidity in some of the products, so especially on the FX side. So if since we're requiring 2 lots of the SGX FX If only one is available, we're not going to be quoting the bonded copper leg because we're at a risk of getting legged out, meaning that there isn't enough liquidity on the FX side. So the system will basically stop quoting until the liquidity comes back on the leg that's not liquid enough. Just a quick one related to the specificity of the products traded in China, which is different than the ones in the rest of the world. For those who don't see that every day, there's obviously a way for the orders to be sent with different types of characteristics. So if you wanted to send it as an arbitrage order, a hedge order, then you can actually do it. You can do that at the order placement level. And you can also decide whether you want to have a long today, short today, long yesterday, short yesterday. So you will have split longs and shorts on those markets, but we can also allow for a netted version of it. So any long position today will be offset by a new short position and vice versa. So this is why there's a little bit of a difference on the bonded copper view. Copper can also be spreaded against the COMEX copper, that's CPE on this side. And we can see that this would be a ratio of about 2 to 1. And the correlation is a little bit lower than with the LME one, but still quite interesting to be traded. Next, we're going to iron ore. And iron ore is traded on various exchanges. So obviously we've got the INE side. The SGX one is a little bit more liquid than the one on HKEX, but there is something to do on the HKEX side as well. We can see that the contract values are pretty similar, but they're pretty low. And this is where the small size contracts will be handy. And we can see at the bottom here that we have the INE iron ore against a mini contract on the HQFII, which is about $20,000 worth of contract value. And this is why we have a 2 to 1 ratio. And then spreading that against the FEF, which is the SGX iron ore. That can be done a little bit differently because we can see that the SGX mini contracts is actually a little bit more liquid than the HKEX one when it comes to the FX futures. So you could use the SGX mini contract, but be a little bit overhedged in terms of FX, or increase the quantities in the iron ore contracts and use the big contract on the SGX FX. So it's basically a give and take. It's either you're using more quantities on the iron ore or a smaller contract on the FX side, but risk a bigger spread. Zinc is one of the last ones that we're going to be looking at, and zinc is one of those that can be traded against LME. The contract sizes are 5 to 25, so it's really a 1 to 5 ratio between LME and the Shanghai zinc. And another one that's a little bit less liquid, but still quite interesting. It's one of the 2 contracts that we'll be looking at on the HKEX. So the HKEX actually lists 2 contracts when it comes to mini zinc. you have a USD denominated one, which is the one that we're looking at right now. And we can see that there is actually something going on, and you can see that the orders that we generate are pretty close to the market. And there's also, and this is one of the other sort of alternatives and the sort of new opportunities that this is going to create. The HKX also has a CNH denominated mini contract, which doesn't trade a lot anymore. It used to trade a little bit in the past. I'm pretty sure that they're still listed and they're not planning on delisting them. But the advantage of that is that for market makers who want to start, you know, being active on those markets, it's an advantage because there is no longer a need for a FX futures leg to quote that. So it's really a one-to-one straight from the Shanghai to the HKEX. TSR20 is an interesting one as well. We can see that this is a fairly straight forward ratio as well. 10 tons for any against 5 tons on SGX. There is a quite a high correlation between the two. We can see that mostly on the fairly low number of bars. And then here we can see that this is quite an active market on both. There's a little bit more liquidity on the I&E side. So actually this can be used to quote the SGX and complete the spread onto the NR side. Gold and silver are obviously, you know, pretty large contracts on both exchanges. So there's obviously gold and silver are extremely liquid products on the COMEX, the CME, and so that's kind of you know, an easy one to look at. But I wanted to go through a slightly different way, and again a little bit similar to the previous contracts that we saw on zinc. There is an alternative on the HKEX, which lists some CNH products. So the gold and the silver products are tradable on the HKEX. They are not very active either, but again, it is a huge advantage for market makers who want to use the Chinese products to quote the HKEX side in a very easy manner. Lastly, we have PTA. So this is something that we talked about a couple of years ago when this was made available. It's slightly more deviated and not as straightforward spread or arbitrage opportunity, but it is still there. So PTA is obviously part of a process that comes from crude oil. So there's a transformation process, turning it all into naphtha, PX, PTA, and then PET. I'll spare you the complexity of the words, but basically there is a high relationship between crude oil and PTA due to the transformation process. There is actually a PX futures contract on the SGX, but it's not liquid at all. So there is not much to do on this one, but the obvious liquidity, high liquidity on the crude oil and the liquidity on the PTA makes it an interesting arbitrage. We can see here that so the arbitrage is not obviously a a one-to-one basis, and this is why the correlation is a little bit lower when we look at the crude oil on NYMEX and the PTA into US dollars. So we can see that over 2 or 3 bars, it's quite interesting. But the more interesting is if you look at them on an averaged basis. and you can see that the correlation is a little bit smoother there. And the execution ratio, what we had previously was a 16:1 to do that. So it's 16 PTA in USD against 1 crude. And we can see that there is enough of the correlation to make it interesting. So I hope you found something interesting in this, and this will conclude my session. Any questions you may have, just don't hesitate to email us and find more information on cqg.com, and I'll pass it back to the host. Thank you.
Thank you very much. Thank you very much for the introduction, which is definitely educational. And well, just a minor correction, iron ore in China is actually in Dalian instead of Anyi, but that's okay. I understand there are too many exchanges here in China, and it happens sometime. And okay, so I think all of our speakers has finished sharing their section, and there are some questions in the chat room, and let's go through that one by one real quick. So first question, would like to ask how long it takes if I post cash from DBS to my margin account in Dalian, given the cash will flow once again interbankly. And I think that should be a question for Iris, I guess. Do you want to take that one, Iris?
Yes, thanks, Chen. For this question, actually, DBS will normally take 1 to 2 hours to process the cash remittance. So if it's for urgent needs, you can in the meantime reach out to us, and we could tell ops to process for you on urgent basis, and that will shorten the time to within 1 hour.
Okay, thank you. And next question, what would be the price for historical market data? And Mara, do you want to take that one?
Yes. So for the historical market data, you can contact us. We can provide you for free. Then just let us know what kind of specific products you are consider with, then we can send you for the data.
Okay, thank you. And I think the next one is also yours. Could you please explain how client money protection works for clients outside China? And because they are probably going to face a local office like UK or Singapore. And please confirm there is no way to execute with broker A, well, execute with one broker and give up trades to another broker to clear. And what non-cash collateral can be accepted by brokers for margin, please?
Okay, so for the Chinese futures market, actually is the most strict financial market here. So all the margin is protected by the margin monetary center. It's not in the broker account at all. Even it's not like related to which bank can use it immediately. So it's supervision under the government central center. So no worries for this part. And in China, for the brokers, always executive and clearing in the same membership. If we are the member of the exchange market, we can help to do the execution and the clearing in the same firm. So that's why you don't need to fund the different partners to do the same thing inside of China here. And the second question is about the same as a margin. So as a Chinese company, you also can try the warehouse deposit, but it's not allowed for QFII at this moment. So at this moment, as a QFII, you can try the Chinese RMB and also the treasury bonds, which is like published by the national bonds here. This is my answer for the second one. And
All right,
Chen.
thank you.
Yeah.
I think that's pretty much all the questions in the chat room. And if you do have additional questions in regard to this, and you're always welcome to to send us your question to our NHOverseas@nanhua.com, our department email, and we will get back to you as soon as possible. So if there's no additional questions today, I think we will call the day. And thank you to all the speakers and all of our guests here. And we will keep you in touch and keep you posted on what's happening here in China, especially when it comes to QFII trading futures and options. And thank you again for your attending, and I'll see you next time. Thank you. Goodbye.